We started out the year with a great deal of optimism, but of course the Delta strain hit us.
When COVID numbers were down, the economy was up, but when COVID numbers were up, the economy headed back down.
I think a roller coaster ride is a good description.
For residents of New South Wales and Victoria, there was a really tough patch in the middle of the year.
2021 was meant to be better than the year before, when COVID first rocked our world. Our expert panel of economists examine if it was. The economy was tipped to grow by 3.5%, but after the Delta variant arrived in Australia, it was revised lower to 3%. Despite hundreds of thousands of people unable to work because of lockdowns, the labour force was one of the best surprises for economists. The year began with an unemployment rate of 6.4%. By August, it plunged to a 13-year low as Delta lockdowns meant out-of-work Australians weren't counted in the official figure because there were no jobs to look for. As restrictions lifted, the unemployment rate started increasing again.
One of the things I was very reassured about was how robustly the labour market recovered, and we managed to get our participation rate and our employment levels for residents right back up to and even beyond where we were pre-COVID.
The unemployment rate is going to end the year below 5%, and an unemployment rate with a 4 handle on it is not something that we had for many, many years.
Wage growth is yet to deliver the same momentum.
The job vacancies, people moving around, labour shortages, that's got to put some pressure on wages, at least in some parts.
We're starting to see that in the data already. The thing about wage growth is it turns really slowly. It's the economy's supertanker. It does not gain speed fast.
What did gain speed? The price of fuel, construction and home sales, which pushed up the cost of living. But some economists say that won't last.
Petrol prices aren't going to keep going up at over 20% a year, which is very welcome news for everyone. The demand and the supply, they will rebalance each other. So those factors, I think, will fall away.
Core inflation hit the RBA's target band in the September quarter. Keeping it within 2 to 3% is a key measure for the Reserve Bank to lift the official cash rate.
We think that's where inflation's heading next year, towards the top of the Reserve Bank's target band.
For most of 2021, the central bank indicated the first rate rise would be in 2024, but toward the end of the year conceded it could be in late 2023. Our experts think it'll be sooner.
My money would be on, if not 2022, then certainly early 2023 would be more likely for the first interest rate rise.
It may be 2023, but that will be a sign that the economy will be strong enough for long enough that the Reserve Bank will be happy to start to charge more for money.
We ultimately think they'll get around to raising the cash rate by the end of next year because the economy will be running at full tilt.
I actually think that there's going to be a little bit of heat coming out of the economy anyway, no matter what the RBA do. I don't think they'll have to move too aggressively when they start going.
Of course, we've been here before, with an economy seemingly in recovery before Delta pulled the handbrake. The difference now, vaccinations, which will hopefully temper any economic fallout from future variants like Omicron.
We're really learning to live with COVID, what it means, how we adapt to it and how we tackle it from an economic perspective, also from a public health perspective.
As we continue to adapt to pandemic life, there will also be other challenges.
COP26 was a game changer in terms of the language, the role of businesses, the economy as a whole, not just governments. This really is the death knell for fossil fuels, and it's a warning sign to governments that they need to be planning the transition. So the pressure is on across all sectors of society to see that change unfolding.
And of course, we can't forget China.
While our attention was very much on COVID and the fight against it, relations with China went down, but also the Chinese economy began to slow. And it's been slowing in ways that hurt the Australian economy, showing up in things, for example, like a lower iron ore price. COVID is the main game, but China, having been our friend in economic terms for so long, may not be as friendly to the economy in 2022.
If COVID has taught us anything, it's that we live in uncertain times and predicting the future isn't easy. As the world grapples with the new variant Omicron, our experts say we should be prepared for just about anything in 2022.